welcome back to Gurula Markets with May. It's January the 26th, and we've got the FOMC meeting coming up here pretty quickly. So I'm going to run through this fairly quickly. The market is, for the most part, up pretty aggressively here. Share screen. Let's see. It's my favorite visualization from FinViz. And you can see almost everything is up. There are a few pockets. AT&T reported earnings this morning. And while it was good for AT&T, I don't think it's enough for people to be really excited to put their money into AT&T over all the other opportunities that have come into play in this marketplace. Interestingly, ADP also blew out the quarter. That's really an employer data type company, but I think because the multiple is so high, this traded down. And Capital One Financial had a reasonable quarter, but because they're spending so much in CapEx to just trying to keep up with the other credit card companies, it's taking a little bit of a leg down today as well. And Boeing, Boeing actually may become a short favorite in the near future. The CEO is doing a great job on turning things around, but commercial craft sales are really the way that he's supposed to make his bread and butter. And, these airlines, they just don't have the money for the next 2 quarters. They find intriguing ways to finance these planes. So I'll give you that. But at the same time, I think with Boeing, it was not the best earnings report, so to speak. And I am going to show you in particular a couple things that I thought were very interesting from the Boeing meeting. But I really want you guys to realize that this trade up, I think I have been of the opinion that the market would trade up fairly aggressively around or at this run up into the FOMC. It could be really interpreted one of 2 ways, which is the market is in fact really wanting to buy itself. And if that's the case, then you'll really see the market take a leg up immediately following the FOMC. There are just a lot of things that, in my opinion, are definitely undervalued. The market might say otherwise, but we shall see. One of the areas that I do want to mention that's strong, but not as strong as it could be, is still this energy piece. We still have all the weirdness that's going on in the Ukraine, and that is not resolved by the FOMC meeting. So to the extent that there's still time to get in these names, I would. Again, as you guys remember where I left it off yesterday, I'm still a huge fan of these pipelines. They will be the net beneficiaries, and they've traded up today a bit, but you still have beautiful, beautiful dividend yields on each and every single one of these, and very little risk to any kind of earnings going on. Now, I want to show you some of the macro stuff that came out of the Boeing earnings report that I thought were just really intriguing. And that really has to do with, oh my goodness, I hit the wrong button. 1 second. Boop. That really has to do with, let me put this down, passenger traffic versus air traffic and what it implies. Oh my goodness. I'm just going to have to do this the old-fashioned way. Excuse me. Passenger traffic versus air traffic. Otherwise, that you'd see. This is revenue passenger per kilometer is what this is. And you can kind of see North America, Latin America, we're still at 80% of 2019. That's how you read this. And then in Asia, Africa, Middle East, China, this is why I'm more bullish the United States and really trying to articulate to you that the picture is just not the same globally as it is in what we're seeing in the U.S. And this is part of the reason why I think when you look at the U.S. and people from overseas, so many of our news articles are written overseas in preparation for the news cycle in the morning. The fact is the U.S. and North America in particular is much stronger than other nations. And then if you add on top of that the Ukraine, it gives you a very potentially different picture than what you're hearing. Similarly, I wanted to show you the air cargo traffic is still really, really, really strong. And that's really the primary way that we're seeing Boeing kind of at all. If they've got a shot, it's this part. Now, I also want to show you this global traffic recovery. Here you can see the U.S., and this is reiterated as well. This goes through November, reiterated by the airlines who have said, the U.S. pickup is good. But look how weak the global traffic recovery is. We're still at like 60%. Is that where the line is? Yeah, 60%. Globally, which means even though planes might be flying domestically, you're just missing this entire revenue stream. For a company like Boeing, painful, But for the way that you want to think about the macro picture, I really can't express enough that if you're listening to folks that are overseas, if you can tell that the story is being written from someone overseas, realize that the picture is just going to look very, very different. The U.S. much stronger than other countries, and that is just coming through in different companies that have reported earnings even this morning. Now, tomorrow is a significantly ramped up earnings day. Friday dies down, Monday always dies down, and then next week is a huge earnings day. And we're off into the races for the next 3 weeks in earnings season. You know, there's a number of companies that are reporting, and not the least of which are some of the ones that I've been really passionate about, Dow Chemical, et cetera. But, you know, this market is so choppy, I'm not going to come out so aggressively except on a couple of names that I kind of want you guys to look at. And in fact, I think in a lot of ways, because the year is going to be so choppy, it's more of an accumulate. Make sure that your strikes, if you're going to use options, are a little bit farther out. Alternatively, just buy the companies because they're good companies and the volatility may not be worth it at this elevated state that we're experiencing as we go into the FOMC meeting. Robert Half is one of them. Now, with ADP coming out so aggressively, Robert has started the morning trading down and then bounced back up. And the difference between ADP and Robert Half, even though both of them are lodged within employment, is that Robert Half is undervalued. ADP is at fair value, slightly overvalued. And also ADP's management, even though both of them, quite frankly, in this space are not, in my opinion, shareholder friendly. They're more great business people, and they also are all paid in stock, so they're aligned, but they just really don't do things from a quarter-to-quarter basis. But Robert Half is trading at 20 times earnings, and you can see the revenue growth is 43%, bottom line growth, they get economy of scale. This is one that I've been bullish on for a while. Now, why am I reiterating that today? Microsoft reported earnings last night, and the LinkedIn division alone reported revenue growth of 35%. And also, Microsoft talked about how strong that portion of the economy is as relates to any solution that folks can give you to help you hire headcount. The labor market is really still lacking different types of professional labor skill sets. It's really something that has been reiterated company after company after company. Every single company has been asked questions related to compensation and why that number is continuing to be what it is. And every single company has talked about it. It is the bias of these calls. Robert Half here at 20 times is probably going to come out better than expected, or at least very, very strong. And we're going to see it rally, even if it just rallies back to where it was. So a couple different ways you could do this, but I would, even though this is going to be risky, this could go to zero, I'm not even going to pretend, but if you do the 115, 125s, you'll pay 340, 360 per contract pair. Your gain is potentially $650. That would be the max, and we would be looking to get out probably at 600. So I'm just giving you what the math would look like if you were running it in an options calculator. Return on invested capital would be about 85%. Or 560% annualized-ish, and that's over 51 days, break even at 118. So Robert Half is one. If you were going to ask me, May, what's my lottery ticket for tomorrow, this is one I would consider as a lottery ticket again, but not the worst lottery ticket, just given that we've got earnings coming out tomorrow. It'll be after the close. They usually report after the close. They may publish their statements before that, and I would just hold this through next month. Now, the other ones, I really want to reiterate Pfizer again this morning. It is trading up this morning. You know, and really here, I'd focus you in on the leaps. If you want to go shorter term, you can. Abbott reported earnings this morning and crushed the quarter, but the powers that be bid it down. Abbott does trade at a slightly higher multiple to earnings than something like Pfizer. Pfizer legitimately trades dirt cheap. I mean, it's trading at 11 times EV, 9.5 times earnings-ish, probably closer to 10 times this morning as it's bounced a little bit. But we're really talking about significant revenue growth here, continuing, even if people believe that there's a quote-unquote slowdown due to how we ease our way out of this entire coronavirus situation. We're still talking about crazy earning and revenue growth and a safe place to put your money. to the extent that you kind of want to diversify between these more aggressive names that are out there and safer plays where you're not going to lose your capital. I would prefer that you just buy the stock. Alternatively, if you buy the leaps, we're really talking about a 10% gain over the course of 388 days for you to like be fine as far as that goes. But you know, this one, $2.20 is $2.30. I think now it's like $2.50 for this contract pair. You know, check it out, see if it's something that works for your investment portfolio, and this will come in as long-term capital gains. The other one that I wanted to mention as well is Facebook. Facebook, if you look at it, has gone absolutely clobbered, and for a company that will have significant growth in the years to come, this one does trade at 22 times, growing at 35 times on the top line. Earnings is a little bit slower relative to some people's thought process. I don't actually see it that way because I do think that some of the things that Facebook is doing with WhatsApp, with some of the things that I believe he's spoken to on the metaverse, I know how much everybody hates the word metaverse at this point, but the fact is we're going to continue to move in that direction. Yes, there's hair on this one, but this company used to trade at $380, and now it's really like trading at a quarter, 3/4 of that, 25% down. This one, as a leap, may be very interesting. We're talking about a 15% gain, and you would be highly leveraged to that. So at $6-ish, I'll call it, your max gain is around $14 or so. You'd be making around 120% return on invested capital if you just hold it, and this thing backs over to, you know, 356, 25 over the next 415 days. If you want more of a lottery ticket play, you could just have it retracing back to 330, which was what happened before. Here, let me increase the size of this. You could just have it retracing back to 330, and on that retrace, you could just do this call spread if you wanted to, and that would just be buy the 320s, sell the 330s. You would pay about $250 right now. You'd stand to make $750, so it's like a 2-for-1 essentially. So that would be one potential, just retrace to 330 if that's what you're interested in. Okay, that's all I've prepared because I do want to keep it short so I can kind of watch how this thing trades into the FOMC without feeling a sense of tension. Any questions? David? All right, if there's no questions, I'm going to go ahead and end it very quickly today, and we will see you tomorrow. Hopefully you guys are positioned well for the FOMC, and talk to you tomorrow.